You know, for centuries, traders have had this special visual language to tell the story of the market's daily battles. And it's not about some complex algorithm. It's about simple, elegant shapes that pack a serious punch. Today, we're going to unlock the secrets of Japanese candlesticks, and you'll see just how these simple visuals reveal the psychology behind every single trade.
So just take a look at these two charts. They're built from the exact same data. But let me ask you, which one tells a more vivid story? I mean, the line chart, it gives you the basic plot, sure. But the candlestick chart? Now that gives you the drama, the conflict, the emotion of the trading day. It's a way richer visual experience.
So, how does this actually work? Well, it's all about transforming four simple data points, the open, the high, the low, and the close, into a really clear visual story. We're basically moving from raw, boring data to the real drama of what the market is feeling.
Okay, before we can read the full story, we have to learn the alphabet, right? And the most basic piece, the building block of this entire language, is a single candlestick. So let's break it down.
Every single one of these candles, no matter its shape or color, tells you about four key prices. At the very, very top, you've got the high price of the day. At the very bottom, you have the low. And then you have the open and the close. And those 2 points form that thick part right in the middle, which we call the body.
Let's focus in on that body. This thick, rectangular part is the main event. It represents the core tug-of-war between the buyers and the sellers. It shows us exactly where the price started and where it ended for that period.
And what about those thin lines sticking out from the top and bottom? Those are called wicks, or sometimes you'll hear them called shadows. Think of these as showing the full range of the battle. They represent the extremes, the absolute highest and lowest points the price hit during all that fighting before things finally settled.
Now here's a crucial part, the color code. It's actually incredibly simple. If the body is white or hollow, it means the closing price was higher than the opening price. That's a good day for buyers. They won. If the body is black or filled in, the close was lower than the open. That means the sellers took control and won that day's battle.
So once you understand the basic anatomy, you start to see that different shapes are kind of like letters in an alphabet. Each one has its own distinct meaning about the market's mood. Learning them is really the key to reading the story that the chart is trying to tell you.
Let's start with the basics. Over here on the left, we've got long days. See those really long bodies? They represent a big price change, and they show that either the buyers or the sellers were decisively in control. No question about it. Then on the right, you have short days. The small bodies show there wasn't much of a price change at all. Kind of a quiet, hesitant day. Now have a look at this one, the spinning top. It's got that small body, which tells us the open and close prices were very, very close together. But look at those long wicks on both ends. This means there was a huge struggle during the day. Buyers pushed the price way up, sellers dragged it way down, but in the end, nobody won. It was a complete stalemate.
And this brings us to one of the most important candles in the entire alphabet, the doji. A doji is a really special case where the open and close prices are pretty much the same. The body is just a thin little line. This represents a moment of perfect, total indecision in the market, a true standoff.
The source material puts it perfectly. These are considered days of indecision. And why is that so important? Well, because a moment of pure indecision, especially after a strong trend up or down, can often be a warning that a change, a reversal, might be just around the corner. It's a critical signal to pay attention to.
So we've learned the letters. Now let's see what happens when we start to form words and sentences. Because when you combine these individual candlesticks, they create patterns that tell a much larger, more complex story about what's really going on in the market.
And this right here is the core idea. These patterns aren't just some abstract technical signals. They are, and I'm quoting here, a psychological depiction of traders' mentality as time unfolds. We are literally reading the shifting balance of fear and greed right there on the screen.
Let's look at a classic story, the Morning Star. Think of it like a 3-day play about a potential bottom. On day 1, you've got a long black candle. Sellers are firmly in charge, continuing the downtrend. Then, day 2, we get that small body, maybe even a doji, a clear sign of indecision. Seller confidence is starting to crack. Then comes day 3, the climax. A long white candle shows that buyers have roared back to life, taking decisive control. Just like that, the trend has potentially reversed.
And like any good story, there's a mirror opposite. The evening star tells the exact same tale, but in reverse. It's a bearish pattern that can signal a top, where buyers are in control, then they hesitate, and then bam, the sellers take over. It just goes to show how these psychological stories can play out in both directions.
Now, it's really important to frame this correctly. Candlestick analysis is an absolutely incredible tool for understanding market psychology, but it's more of an art than a crystal ball. It does not predict the future with 100% certainty.
And that's why they are almost always used with other tools. I mean, while the candles tell a powerful story on their own, their signals become so much more reliable when you get confirmation from other technical indicators, like the stochastics you see here. Think of candlesticks as one really powerful piece of a much larger analytical puzzle.
So let's boil this all down. What are the key things to walk away with? First, candlesticks make that daily battle between buyers and sellers visual. Second, the body and the wicks of each candle tell you who won and just how intense that fight was. Third, the alphabet of candle shapes gives you an instant read on decision versus indecision. And finally, patterns like the morning star tell these amazing multi-day stories about shifts in market psychology.
With this new language, you're not just looking at squiggly lines on a screen anymore. You're actually reading a story of human emotion, of hope, of fear, of greed, and of conflict. So the only real question left is, now that you know the basics, what stories are you going to see the next time you look at a chart?